This content should not be construed as financial or investment advice. I am simply sharing my personal views and perspectives, which I hope will educate and inform and help give you the confidence to make your own financial decisions. If you need financial investment advice, please seek in-person advice from a qualified, experienced, and regulated finance professional. YouTube will not save you. Hello, I'm the fourth accountant. At the time of recording, it's June 2026, and it's a new day and another day for Companies House to make things just a bit more difficult for business owners and entrepreneurs to basically make some money and progress. So at the time of recording, as I say, June 2026, there will be some changes to the filing requirements for micro entities. So these are businesses in the UK which will have to meet 2 out of 3 criteria to be recognised or classified as a micro entity. So it will be a business with no more than £1 million in revenue, a balance sheet value, so this is a business value of £500,000, and have employees of less than 10 people. So if 2 of those 3 boxes are ticked, then essentially that business will be considered a micro entity. And also one of the things that is really important for companies of these size, because again, they typically tend to be individuals or very small businesses, or maybe it's a family business, is that it wouldn't be audited as well. But there has been a wider shift and context with regard of what is going on in the UK. And as I've mentioned in previous videos, it does feel as though the Labour government in particular, in terms of a lot of the changes they've been making, it feels as though they want to know more information. So they recently introduced the Making Tax Digital rules. They've introduced rules around persons of significant control. And all of these changes have meant essentially that more and more information is being collected about directors, more and more information around your income is being submitted through HMRC, and also they are using, I believe, AI and engaging a lot of data companies like Palantir, infamously with respect to NHS data, where they'll be able to analyze this information. And we've also seen this shift as well with respect to crypto accounting rules as well, whereby again, they're expecting a lot of the custodians, so these will be companies that provide custodial services, for example, or allow you to onboard on their exchanges. So this will be companies like Coinbase, where they're required to provide information about the individuals that are onboarding, as well as transaction information as well. So lots and lots of more information is being required, and the justification behind that from the government's perspective is that this is for the benefit of us. It's to keep us safe, and it's to make sure that people are not avoiding taxes or evading taxes more specifically, because avoiding taxes is perfectly legal. And also that people are not benefiting from illegal funds, or those that are subject to restrictions or sanctions cannot also benefit from the proceeds of crime. And the specific act we're looking at here is the Economic Crime and Corporate Transparency Act, and the changes I've described in relation to what is going to be happening in terms of the reporting requirements, the new reporting requirements for micro entities, is sort of reflecting the later stages of that particular act. So what I'm going to be going through in today's videos are the main changes that will be happening, expected around the 1st of April 2028. And essentially these are the things you're going to have to be thinking about and getting yourself ready for as a micro entity business owner going forward. So one of the first changes will be that you will now be required to complete a full income statement or a profit and loss statement. Currently, you can provide abridged accounts, and normally all you would have to show is your balance sheet, which again is a very simple statement that basically shows you what assets you have, what liabilities you have, what cash you have, and then there'll be very simple disclosures from the director, and then maybe some disclosures around the number of individuals working for the company as well. And that would be basically it. However, as I've said, if you're now having to prepare a P&L, as we call it, a profit and loss statement, it basically means now you're going to have accounting systems in place to do the double entry, the trial balances, and then basically prepare those accounts for submission. So that is going to introduce some extra cost to your business. It's going to probably need some additional skill sets if your bookkeeper cannot do it. So it's something that is be good to have in place before you end up in a situation before the 1st of April 2028 where you're struggling to get this information together. And as I said, it does mirror in many ways what we're seeing with Making Tax Digital for sole traders. So these will not be companies, these will be individuals that work for themselves, but again, they're now required to regularly report on their income. So it's going to be very, very similar in that regard. And as I say, it will be good, I would suggest, to be thinking about getting those processes in place now. The next change with respect to this is that there will no longer be abridged accounts. So this is basically an extension of the point that you will now have to produce an income statement. So you'll have to produce an income statement at the very minimum. You'll have to produce a balance sheet, and essentially this option to do abridged accounting will no longer be there. So the accounting will not be as simple. And as I say, it just means you're going to have to disclose more to Companies House. But one thing to bear in mind actually with respect to the profit and loss is that you don't, although you have to submit it to Companies House, you can opt out of that information being publicly available. So it will be unlike the abridged accounts now or the balance sheet now, where if you submit it, it is there for all to see. Your profit and loss will not be there if you opt out. But the key thing is that you have to opt out. If you don't opt out, the default position is that it will be visible, right? So that is one thing to note on that point. Now, another change, and I think it's something many business owners will be familiar with anyway with respect to their tax returns, is that you will no longer be able to simply input the balance sheet numbers or the accounting numbers or submit paper returns. It will be a case now where you will need an established software system, an established accounting system that will allow you to submit what we call IXBRL filings. And this is just a particular format that Companies House and HMRC like, that is that can be read by the systems their end. So I hope you're enjoying the video, and please feel free to leave a comment, because it's always good to hear different perspective on the topics we talk about here, and it's the way we learn. Otherwise, if you are new to the channel, please feel free to like and subscribe. In the meantime, if you are worried about your personal finances, the amount of tax you or your business is paying, or you're in a quandary around how you can scale your business by leveraging financing and accounting automation, please feel free to reach out to myself for a no obligation consultation. Otherwise, let's get back to the video. Another change is there's going to now have to be more of a justification, for want of a better word, as to why your business is not being audited. So previously, or currently I should say, at the time of recording, statements around the reasons why you are exempt from an audit, a statutory audit, were very straightforward. You could use very, boilerplate statements, and you were fine. Whilst now, you're going to have to strengthen those statements, and that will be a very subjective view from Companies House as to what the strength means. But what you should be able to rely upon actually is the accounting software you're using. So often they do work collaboratively with HMRC and Companies House when they're developing their solutions. And therefore, if you pick, a bona fide, reputable solution, then you should be okay. So as I say, that's the key thing to consider there. You will need to just make sure that that wording is correct and it can stand up to scrutiny with respect to anything that comes back from Companies House. Because as I say, it seems as though they're now going to be taking a more bullish approach around challenging why companies are not receiving or subjecting themselves to an audit. And clearly now they're going to have more information regarding income and expense once they have the profit and loss, because as I say, your balance sheet doesn't tell them very much, whilst your CT600, this will be your tax returns, and your profit and loss in conjunction with the balance sheet will tell them a lot about your business, and therefore they would be better placed to challenge an audit exemption, for example. Now, another change, which relates to the accounting and the information they would like, is that you'll have to submit all your accounting together. So as I mentioned, prior to the 1st of April 2028, you could submit your accounts as and when they're ready. Now, in practice, most people just did everything at the same time, but the point is now you just don't have that flexibility anymore. So again, HMRC, Companies House, they're not trusting entrepreneurs to get things right anymore in this regard, and play by the rules, so to speak. They're just being a bit stricter about what they expect to see, so that it makes their life easier when assessing the returns, assessing the submissions, and potentially thinking about challenging certain things around that if they need to. And then finally, there will be restrictions around constantly changing accounting periods. So HMRC and Companies House do have a very cynical view about companies that regularly and frequently change their accounting periods. So up until now, it's something that you've always been able to do. So if you just prefer doing your accounts in December as opposed to September or March, you kind of always had this freedom to do this, and you could just change it as and when you wanted to. That freedom, I suspect, will still be there. It's just that they're looking at why somebody might be changing very, very frequently, more cynically, and therefore they just want to restrict that a bit more. So I don't know specifically, what that will look like in practice, albeit it will just mean you just won't be able to change your accounting periods as frequently as you'd like. So you just have to carefully consider your chosen accounting period and essentially try to stick with it. So that basically what it will allow Companies House to do, and any users of your accounts to do, if they're publicly available, is just have consistent periods where they can basically assess performance. And I think for me, in many ways, that seems reasonable, right? You don't want businesses constantly changing their accounting periods. And you can imagine if it was a listed business, what that would look like if they're constantly changing their accounting period. So to me, in many ways, that makes sense, even though, it just removes flexibility from the entrepreneur per se. Yeah, so I guess the question is, there's quite a few things there that Companies House and the government are changing. And one has to wonder, outside of what I've mentioned in the introduction there and that context I tried to provide, is why are they doing all of this, right? Because in many ways, this does make business more bureaucratic. It creates more it becomes more burdensome to run your business from a compliance perspective. And it can feel as though, again, the government is making it more difficult for people to basically go out and make money, right? So if you're working, what you're going to be finding is that there's just more and more indirect taxes with respect to what had happened in the budget in 2025. So obviously we know there's things like fiscal drag, whereby more and more of your future earnings will be subject to higher rates of tax. They've introduced obviously restrictions around the ISA, for example. They've introduced additional taxes with respect to rental income. They've reduced the pension salary sacrifice arrangements, so therefore they're less generous. And obviously they've got mansion taxes as well. So, you know, one may think, okay, well, what should I do? Maybe I should go down the side hustle route, and maybe I should start a business. But then if you go down the side hustle route, you've got to think about making tax digital for income, which again is an additional burden, which means again you've got to think about accounting software, which obviously costs more money. Or you're thinking, right, okay, maybe I will, you know, set up my own business, you know, do my own thing. But then what you're going to find again is that there's less flexibility about how you run your business, how you file your returns, and you're having to spend more time basically defending yourself from Companies House if their expectation, for example, is that, you know, you should have an audit, but you're having to prepare, for example, a stronger rebuttal about why you don't need an audit. So I think, again, one may ask themselves, well, does this feel fair, right? Does this feel reasonable? And I think the question in my mind would be, there's two ways of looking at this. So on the one hand, I would agree. This does feel a bit like overkill. It does feel oppressive. And my own personal feeling is, in the context of the wider things I've described and the wider changes, it does feel oppressive in many ways, right? It feels as though, you know, the ordinary worker, the small business person, the sole trader is having to do a lot to convince HMRC, to convince Companies House that they are running their business in a legitimate way. They're not evading taxes, you know, and they're not trying to shortchange HMRC. Whilst we're not seeing many changes that affect the truly wealthy, right? Because in a sense, it feels to me anyway, that they are trusted to do the right thing. And I think for me, that is ultimately where the challenge will always be. Why can't we also be trusted as much as we're trusting the talented billionaires to do the right thing? So I would want to see this consistency across the board, right? So either we're going to remove regulation and remove bureaucracy and remove these excessive, depending on how you see things, compliance requirements from everybody, or we put them on everybody, right? And for me, that is where my critique ultimately lies. Because many of these changes that I've described, I'm fairly, on a personal level, indifferent to. And I think ultimately, if you have a professional business, if you have a business that's going to scale, if you have a business that's going to be able to withstand investor and prospective investor and sophisticated investor scrutiny, you'll be ticking all of these boxes anyway, right? Or you will be able to very, very easily. For me, it's more a matter of principle, right? And where, as I say, is this energy for the ultra wealthy, right? And it's not, you know, one of the more recent videos I talked about, you know, one of the controversies where we're seeing with the SpaceX IPO is that they've actually made things easier for that IPO to happen, you know, for the benefit of, you know, retail investors, for the benefit of index funds. And you can make your own decision around whether that is a good thing or a bad thing. But on the one hand, we're seeing things being made easier for certain types of businesses. And then for smaller businesses, for micro entities, we're taking this shift where we're potentially making things harder or more bureaucratic, you know, and it's hard to see on balance if that actually makes sense or if it's even worth it actually. And for me, that is why, you know, you can question some of these things. But yeah, ultimately, as I say, the key thing is to make sure you're prepared, you know, get things in order, get the expertise you need if you need expertise, and yeah, you should be fine. But until next time, take care. Peace.